So we're here today with Margaret Tozier. She is a mortgage loan officer with CCF Bank. Margaret, thanks for coming back on the show.
Absolutely. Thanks so much for inviting me again. It's always a pleasure.
Today we wanted to talk about our appraisal gap strategy. And this is something that's coming up here recently with um, a situation where people are offering more for a house and it maybe doesn't meet the appraisal of what the lender comes out and sees the house and says, oh, hey, it maybe doesn't appraise for what it was purchased for. So we wanted to make sure that we walked through that with people so they kind of understand what's going on.
Exactly. And a really nice thing of this appraisal gap strategy, Tom, is it can take the fear away for customers of ours who are afraid to go. Am I going too high on my offer? I don't want to have to spend a whole lot of more money out of pocket if it doesn't appraise out.
Yeah,
But there are some nice strategies to help alleviate that fear. So you have confidence to go high. If you really love this home, go high, do what you can to get it. And it might not be as painful as you actually think it would be financially. And I can kind of show you a little graphic to highlight some of that. It's a little spreadsheet. And there are many ways to use this great appraisal gap strategy, Tom. Today, I just want to highlight one scenario that is common. Sometimes folks want to do 20% down. As you know, they want to avoid that monthly mortgage insurance. That's the goal they have. So this is a scenario, if we look here to what I call plan A, which is the way we hope things go. If we had a purchase price of $300,000 and you want to avoid that monthly mortgage insurance, you'd have to do 20% down, which would be $60,000 and give us a loan amount of $240,000. So that's great. But what if the home appraises low? For instance, what if a 10,000 loan only came in at 290? Now what do we do? Well, if you still wanted to keep at your 80% financing, you'd have to come up with $8,000, which is really a lot of money. So how about this as a plan? Instead of that, we could, just keep your loan amount the same and you're financing about 83% of what it appraised for. Your monthly mortgage insurance in this scenario is only $30 a month. It's really not that high. But what if you're like, I hate that monthly mortgage insurance. I don't want that to be a part of my payment.
right.
Well, how about this? Instead of bringing $8,000 out of pocket to avoid monthly mortgage insurance, there is an option to do what's called a single premium mortgage insurance option. It's a one-time fee you pay at closing. You're paying your premium one time at closing. It's paid up front. And in this scenario, that is only going to cost you $1,392. I am keeping your loan amount the same, your monthly payment the same. There's no monthly mortgage insurance. And instead of coming up with $8,000 to cover the difference, we're going to use a single premium mortgage insurance, and you're just paying a $1,392 at closing. So less than $1,400 out of pocket instead of $8,000 out of pocket to accomplish your goal. And that's with a $10,000 lower value. I think it's pretty amazing.
It is. It is. And that would work. Obviously, this is just a sample, but that would work under essentially any sort of disparity between the two.
Absolutely. This is one sample. I even have, it's set up for if someone's doing 10% down, 15% down. This particular was 20% down. And this amount, I just want to throw out there, this is if there's one borrower. We can sometimes get a cheaper mortgage insurance premium if there are two borrowers. Another nice benefit some folks don't realize is we can sometimes actually get a lower interest rate if we're going to put less than 20% down. And people are often surprised by that. Like, how does that work? Well, think about it. Your interest rate is based on risk. With mortgage insurance, the bank now knows there's insurance there to take away some of that risk.
Right.
Less risk can be a lower interest rate. It's probably only about an eighth. Depending on the day, I can get that eighth lower interest rate. So that's a really nice benefit as well, is you might be able to get a lower interest rate on your mortgage, getting that mortgage insurance. And typically, when you're going to pay it up front compared to monthly, you're breaking even with the cost in maybe 45 to 48 months, or up to about 4 years. after that, it's all, go ahead. It's
Yeah.
nice money in your pocket.
Well, that's great. I have not, honestly, not heard of something like this before. So I'm glad that you brought this to me and we decided to talk about it today because, um, and I guess that's another advantage of being with someone like Margaret or someone who's local, that you're not just getting a loan off the internet. This is a local person who is looking out for your best interests
Hmm.
and trying to do whatever you can to make this an easier transaction for your customers.
Absolutely. I actually find it fun to be creative and taking the time to play with the numbers. We work with our private mortgage insurance vendor is Arch,
Mhm.
and they have some really good tools for us to play with. As a matter of fact, I have customers who just this week, they were doing 10% down, home appraised for less, 5,000 less than their purchase price. Thankfully for them, the seller was willing to meet them halfway.
Okay.
um, it appraised for 225, the they're coming to 226.5. The customers are thinking, oh, okay, I'll pay the 1,500 extra. They didn't have to, they only had to come up with, we got it, I think that's $630. We kept
Nice.
everything else the same. So they couldn't believe they only had to pay a little over $600 for this $1,500 shortage.
Mhm.
And so they were really happy about it. It's, I think, almost a well-kept secret. A lot of folks just associate PMI or private mortgage insurance with having to be paid monthly, where you have to have the loan for a certain amount of time and jump through a certain number of hoops to have it be removed.
Sure.
They don't know about this upfront option to pay it as a one-time fee at closing,
Mhm.
and you're done. You don't have to worry about it every month on your payment. It can actually be a really nice option for anyone doing even without a low appraisal. It can still be a really nice advantage. If you're going to keep the mortgage long term and you have strong credit, it can actually be more cost effective to pay this mortgage insurance one time at closing rather than every month.
Oh, definitely, definitely. This is a great alternative for folks, and you're seeing this at
Yep.
every price point, correct? I mean, this isn't just a low cost homes. I mean, this is for people that are in
Oh,
the
absolutely.
yeah.
Absolutely. And I really love the opportunity to play with the numbers. Another situation that came in handy with this upfront option, back when sellers were helping to cover borrowers' buyers' closing costs, we actually had some leftover seller credits that would have just gone to waste. What we did was we took that extra amount, applied it to the single premium. We paid part of their mortgage insurance upfront at closing, which significantly lowered the amount of mortgage insurance my customers had to pay every month on their mortgage.
Wow.
It brought it down huge, and they were only doing 5% down. So again, very surprised the customers were at seeing what a great tool this is, that a lot don't even know is even available, but they were very happy. We didn't waste any seller credits, and it actually lowered their monthly payment by quite a bit.
Margaret, are you seeing this become more prevalent now that it's such an amazingly um, intense, tight seller's market? Are you seeing this quite a bit coming up, or are you at least offering this to folks that are coming in saying, "Well, geez, we bought a $300,000 house, um, and it appraised at 280 or 270," or you hear these stories
Yeah,
about things just being so
yeah,
high above, um, what the actual appraised value is.
yeah. I am surprised that I've been hearing that everyone doesn't know, so many don't know about this, and they're just paying the difference out of pocket. The only other option I've heard offered is to just bump up or start paying monthly mortgage insurance, which isn't even a bad option. It truly isn't. If you really love that home, it's not something to be afraid of. But often, as I said, it can be more cost effective to just pay the mortgage insurance as a one-time premium at closing if you just really don't want that as part of your monthly payment. Or if you're going to keep that mortgage long term, it's much more cost effective to just pay it at closing instead of every month.
So this is really where it pays off to crunch the numbers with someone like you, Margaret, um,
Yes.
who has this has this ability and has this familiarity with how to do this, where you're not going to get it off of a .com lender that
Yes,
that you may have heard about.
absolutely.
And so, and absolutely, and like we talked last time, I think just the value of a local lender, that's someone who is in your corner, um,
Hmm.
it really pays off in spades as far as items like this that we're talking about with the appraisal gap, or like we talked about last time, where it's if you have some challenges coming up with a down payment, things that can get um, your payments to a reasonable level and make it more affordable for you to get into a home, especially if you're a
Hmm.
first-time home buyer or a veteran or
Yeah,
things like that. So,
absolutely. And I'm happy to share this tool. If someone, we can do a video meeting like with Microsoft Teams or Zoom or something, where I can go onto that mortgage insurance provider's website and I can play with the numbers right with you. You can see for yourself how these numbers can work and where's your comfort spot, what actually works for you.
right.
Because some people would rather pay more upfront and less monthly. I have other folks who are like, I don't have a lot to do upfront.
Mhm.
Well, then we can just go more on the side of the monthly. But I love showing them the tools that we offer and make sure that we can set this loan up so that they're comfortable.
Okay. Just out of curiosity, do you see an end to the seller's market as it stands today? Are you starting to see this loosen up a little bit as a lending officer out there?
I would love to tell you yes. I don't right now. I do think we're going to hopefully have more homes. The problem is inventory
Yeah.
right now. And I do hope that some folks who were nervous to maybe put their homes on the market last year due to COVID are going to plan on doing it this spring.
Mhm.
The problem we're seeing now, it's such a strong seller's market that I'm finding folks are afraid to sell their home. They'll get an offer the day they put it on the
Yeah.
market. I mean, that's not the problem. The problem is now they're worried, will they get an accepted offer on their next home on time? Otherwise, they feel like they're going to be homeless. So
Right.
I think that's the fear for folks is what am I going to do if I can't get an offer accepted? And so you might, chat with family and friends. Can I stay with you for a while? Um,
How
just,
long?
till I can find that place. Because it's a great time to sell. It
Yes,
truly is a great time to
it is.
sell. Buying's going to be a little more challenging. You need to partner with a great realtor like yourself. You and I have worked together, and I know you will be, I'm not just saying, you will be an advocate for your customer. And that's what you need right now is a partnership with the realtor and the lender. One of my customers is only doing 3% down. Her offer was accepted due to the conversation I had with the realtor, letting that listing agent know
Yeah.
I've already reviewed their pay stubs, their tax returns, their W-2s, their bank statements. I already did a lot of the work up front, and he actually went with their offer, even though they had higher offers.
Mhm.
Because the listing agent doesn't want to accept an offer to find out later it didn't go through
Yeah.
and then start all over. So you want to work with I think even more so right now, a lender who's going to do a lot of that heavy lifting up front to give everyone peace of mind that your offer is golden, and someone who will talk with the listing agent too.
I really view the realtor, um, lending officer, mortgage officer, that is a relationship, as a relationship,
Yep.
a partnership between the people that are facilitating finding the home and the people that are
Mhm.
facilitating actually purchasing the home with the financing. Because
Yep.
um, if you don't have that relationship and you don't have that, um, if there's 10 offers on the table, if I'm an agent, my fiduciary responsibility to my client is to make sure that they are accepting an offer that is that's solid, and that the folks have the buyers that are purchasing the
Yep.
home have that solid financial background. I've spoken with the lender. I will very often, call the lender and say, okay, are they good for this? What's the background? Just like you said,
Hmm.
are the pay stubs in? Is all of this? It's one thing to have a preliminary approval letter in your back pocket versus having here's all the documents. I've already done this work. They're good
Yeah.
for it. So,
Yes. Yeah, we could even, I have right now customers, we've proactively already reached out to their employer and did a verification of employment. If they
right.
had varying income, so that I can be assured the income we have on the application is the income the underwriter is going to use, not necessarily what the customer thought we could use.
Right.
And that's the key piece. Same with money in the bank account. I've had customers, submit an application saying I've got $30,000. Well, 15,000 of it came all of a sudden out of the air into your account. We have to know where that came from.
Yeah.
And if we can't source it, I can't use it. I would rather tackle that beast up front before you sign a purchase agreement to make sure all is well.
Right. And that's just for the seller, just for the benefit of all parties concerned, both agents, both
Absolutely.
realtors, the seller and the buyer. It's in their
Yep.
best interest not to be obviously dishonest or misleading in their
Or just naive. I
just
find it just
naive.
naive.
Right.
They just don't know. How would you know if I've been saving this money in a coffee can for the last 3 years? Just every time I have extra money, I put it in this coffee can and just deposit into my account one day. You might not know that a bank necessarily can't use that money if we can't source where it came from.
Or it's a gift.
So I don't.
Yeah. Mm-hmm.
Yeah. So I think most customers really are on the up and they're honest, good people. They just don't know. And that's where, again, it helps to talk with the lending or the loan officer ahead of time to get that education, and talk with your realtor ahead of time as what is the market really like right now? What can I be prepared for? And even besides upfront, but throughout the process of the application, once you do sign that purchase agreement, I know you and I would talk at least once, or not once a week or once every other week, on how things are progressing, so that we're all kept in the loop all the way till the keys are in hand. That's another piece of that partnership as well.
You don't want any surprises at all in this process.
Correct.
And you're dealing with hundreds of thousands of dollars and people's lives.
Exactly.
No pressure or anything,
Yes.
but it's a big deal.
Well, and I think you would validate too, Tom, right now, it's also the trickle effect. If our transaction hits any bumps or has to push out a close date, that affects our sellers who maybe were waiting for that money to buy their next home. And then it's a domino effect. So that's why it's so important right now to make sure a lot of the work's done up front. We don't have any surprises or delays. It's very important right now that everything goes smoothly.
And honestly, Margaret, I'm dealing with a few clients right now, and one of them is a first-time home buyer. And I was telling her last night, I said, we need to make sure that you have a approval letter in hand before we even go and look at homes. Because if you fall in love with 123 Main Street, we can't make an offer on it without a approval letter. There's just no way.
Correct.
No one's going to wait around for a couple days until you get the approval. In this market, it's just not. You have to have it. Anything just shy of having a suitcase full of cash with you at the time of the offer, but it's serious business. So
it is.
Anything else that you wanted to mention about the appraisal gap process, or anything else just regarding the current market, because it's just such a crazy time right now?
It is a crazy time, but it's also a good time. Thankfully, the economy is going well right now, which is wonderful.
Yeah.
And again, that's why I like talking about the appraisal gap strategy. You don't have to be afraid to go high. It is what it is right now. That's also a good thing. And think of the equity you're going to get. We're seeing great increases in market values. That's going to continue for a while.
Yes.
So you're going to have a lot of equity for any purchase that you do right now. Your equity is going to build up pretty fast. So it does still make it a great time to buy.
Definitely. Yeah. Real estate is always the best investment that you can ever make. If it's a difference between buying a house and buying a car, well, I don't need to tell you.
Yep.
One asset appreciates and the other one doesn't. So
correct. Exactly. So no, it's really good. I love talking about it. I love getting excited about it and jazzed about it. So if anyone has any questions, feel free to reach me. I work at Citizens Community Federal. It's a local community bank, CCF bank. Mm-hmm. Our main hub is out in Eau Claire. We have a nice, strong presence in the Eau Claire, Wisconsin area. I have the privilege of I represent the Twin Cities. I work out of our Oakdale branch as well as Red Wing, Minnesota. And then our wonderful bank ladies out in our Ellsworth, Wisconsin branch as well, I get to work with.
Great.
Yeah. And call me, you can reach me at 651-578-0509. If you want to email me, my email address is M as in Margaret, T as in Tom, O as in Oscar, Z as in zebra, I as in India, E as in Edward, R as in Robert, at ccf.us.
Perfect. Perfect. And I'm licensed in both Minnesota and Wisconsin. So
Yay.
any Wisconsin folks out there that would be interested, I can certainly help them out and connect them with Margaret and the good folks over
Yeah.
at CCF. And
Wisconsin's a great market.
yes, it is. It is. So
Yeah,
again,
I
well,
find you can get a little, they tend to be a little less expensive, I think, in Wisconsin. The
yes,
property taxes are a little higher, but you can sometimes get more house for the money out in Wisconsin compared to Minnesota.
definitely. And then just be right across the border here in Hastings, where I'm based,
Yep.
over there in Prescott, River Falls area, a lot of good deals over there, and
Yes,
very, very nice communities. So, and you
it
get to be
is.
close to Hastings too.
Yeah, and I'm right in Lakeland, so I'm just across the bridge from Hudson, Wisconsin. I'm
There
2
you go.
minutes from Hudson, Wisconsin. Super small town. You have River Falls
Yeah.
close by. Great markets there too, and just really neat places to live.
Oh yes, definitely, definitely.
Yeah.
And beautiful outdoors.
Yep.
Enjoying nature this time of year. This is the best time of year in our area of the country.
I
So,
would agree. I agree. Well,
well, Margaret,
yay.
again, well, thank you so much for coming on the show today. We really
Absolutely.
appreciate it, and I'm sure we'll have you back.
Well, thanks again, Tom. Look forward to the next one. I hope everyone has a great day.
All right, thank you.
Thanks.